Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's update our view on the currency markets, euro currency as usual. What we see yesterday, market has shown some slight update of the lows. So we see that on yesterday's price action was initially to the downside. Market has created new low, has touched the MACD predictor indicator, yearly pivot, and returns right back. So as we said and as we discussed yesterday, the market by this move, or even yesterday, has accomplished all targets that stand now below the current market. And in fact, if market really intends to show the pullback, some sort of the retracement, it should start it right now, because theoretically market has no reasons to continue move to the downside currently, except the only one reason, if it will intend to continue move to the downside directly. That's the only moment when the market could continue move to the downside. If retracement should follow, this should happen right now. So speaking about the target of this potential retracement, we have discussed already that market usually moves in doubles to the harmonic swing. So we see that that swing was the single swing to the upside, and this is rather harmonic. We have measured it already. This one, this retracement, that retracement. So they are very similar. So if market will exceed this move to the upside, it probably will makes it in double. And this distance, I have measured it and put this orange line that is measured the double of this retracement, and it points on the confidence resistance area on the daily time frame. It's 132.16, 132.34 area. Slightly higher stands the monthly pivot point that it hasn't been tested yet by the markets, 132.61. Also, take a look at this consolidation. The classical approach to the estimating of the target of the breakout, if this breakout will happen to the upside, because you can see that was the failure breakout, market returns right back. If we will measure the height of this consolidation counted to the upside, we will get the same area. So we should be focused as target on this potential retracement in an area around 134.35, I suppose, approximately. This is an area that could be treated as the target of this potential retracement. So now is the major question stand with the patterns, concerning the patterns that could let us enter on the long side of the market. And currently, it's pity to say, but we do not have much to do with it. On the daily time frame, we have only this bullish stop grabber pattern. So this is the one pattern that we could stick with. But the stop to this pattern should be placed below the low of the stop grabber. So you can see this rather extended distance. That's the one pattern that we have. On the 4-hour time frame, nothing. So I see just the divergence right at the support, right at the targets that we have specified, but no patterns. And what is another problem with this current situation is that, take a look at this downward channel. Market, in fact, has not broken yet the tendency, the lower lows and lower highs. You can see market creates low lows, low highs. Only here market has made an attempt to break this, but that was the artificial move, as we said. That was on the eve of the non-farm payrolls release. That was the just short covering before the significant event, and you can see its artificial nature, and market has returned right back to this tendency. Again, lower lows, lower highs. From that perspective, the conservative take will be take the position only when the market will break this tendency. So we need, when the market will show the swing up that is greater than the previous swing down. And that probably will happen when the market will break out of this parallel channel. until that will happen, if you will take the long position, you will carry the risk that retracement will not come, and you could meet the continuation to the downside. Because on the 4-hour time frame you have no patterns to stick with, and you now have no signs that this retracement actually has started. So the conservative approach to the trading will be is expectation and waiting when the market will show the greatest swing to the upside, and wait for the first ABC retracement to buy into. That will be the conservative approach to the trading. Just sit on the hands and wait for that position. Another approach, as we said, is based on the trading on the stop grabber. That is also possible. What we see on the hourly time frame? On the hourly time frame, in fact, we see just the setup that could help us to enter, to join with the stop grabber pattern. We see the smaller butterfly that we have discussed yesterday. That was greater butterfly. That's right wing of the greater butterfly that we have discussed. That is also 127, and that is smaller 127 butterfly that has taken place right at this low. Market has shown the appreciation, and take a look, it has hit the ultimate target of the butterfly, 1618 extension of the whole butterfly move from that high to that low, 1618 extension. Here we see a couple of the stop grabbers that is forming on the hourly time frame. Anyway, that is our working swing for daily stop grabber pattern. So that is the ultimate invalidation point of this pattern. That low is 129.10 area. So if market will turn to some pullback to the downside, you could use it to join with the stop grabber if you want. So the first level to watch was 129.85, the 618 support 129.57. Somewhere in this area, depending on how retracement will develop, you could try to enter on the long side of the market to buy the rally, the dip that could appear due to the retracement to the downside. But again, the major signs of the reversal hasn't appeared yet, because due to this development. So that is normal downward action, although it's a bit slower than it was previously on the daily time frame of the 4-hour time frame, but still that is the bearish action. Yes, we have this divergence, we have the expectation, probably that is the eve of the starting retracement, but we do not see the confirmation from the market yet from the price action. So, that's been said, in fact, the only pattern that we have is the stop grabber on the daily time frame. If you would like to take this position based on this pattern, you could do this. We have the reason for that. The probability is not small that market really could start the upward action particularly from this pattern. That's possible. But be sure that you will get the confirmation from the price action on the future trading sessions on the next week. That's really starting to move. Also, pay attention to protecting your position to minimize your risk. If market will show retracement and you will enter on the long side of the market, move your stop, tight your stop as soon as possible when the market will move approximately 35-40 pips in your favor, so you could move your stop to the break even. That will be a sufficient move to protect your position. So I do not see any other setups or patterns that could be traded right now. So decide, will you take the position based only on the stop grabber, or will you wait some more confirmation from the market swings, from the real market, from the real price action on the 4-hour time frame.